The stream got interrupted. I mean, the stream got interrupted as per the stream got interrupted. So, based of internet issues, I don't even know what was that all of a sudden. Just caused a break in our stream. But if we are going to be continuing from where we stopped, if we are going to be continuing from where we last stopped, we're showing structure. We're showing the structure market has been pulling so far, right? Because we're talking about why we wanted to sell down here, why we thought a sell down here might happen, even though according to the trading strategy, once a side of the range has been swept, we're supposed to follow price to the opposite side of the range. So you see, a side of the range was swept and it closed inside the range, showing that okay, this is potential, there will be potential push to the opposite side of the range. You get? So, but then, since we saw that the previous weekly high and the previous daily high were swept and price closed inside the range, so we were like, let's sell. So we sold, right? And but then price, we sold, yeah, we sold, we swept liquidities, we swept liquidities, we swept liquidities. A lot of liquidities were taken out. Liquidities, a lot of liquidities were taken out. We took out these guys, we took out this guy, exactly. So we were thinking that maybe this guy will get taken out as per the trading strategies, price sweeping one side and going to the opposite side of the range. But then I mentioned earlier that if price came here and swept it, it will become change of character. And that will mean further downward movement, which will be against the overall concept of the trade that we've been trying to take of the buy. Price comes from a low, creates an high, a higher low, higher high, higher low. Then it should create an higher high. Then probably come up with a low, high, like that, like that, like that. You probably get to the opposite side of the range. So now I was trying to say, why did we think we could sell that deep? So that's what we're trying to talk about. That's what we're trying to talk about. So we're establishing the structure that market has been playing out so far on the 4 hour. You see an high, and higher low, and a higher low. Now the next thing after an higher low is supposed to be an higher high, right? But price creates a lower high. The moment it's created this lower low, change of character, right? The moment it's created this lower low, change of character, automatically, normally you're supposed to take your sales. In fact, so you wait for price to pull back, take your sales from there, and follow it lower than this. But guess what? Price creates a price created a what instead? An high, a low, a low. I'm going from a low to an higher low, a lower high. That was signs of sales. You understand? So, and then it came down, broke, change change of character at this point. So, change of character, it's pulled back, it's pulled back, then it's pulled back, right? It's pulled back. Most people would layer their sales, right? But then price goes and then it creates, and then price goes and then it creates what instead? It creates what instead? A lower high, then it created an higher low. then it creates an higher low. It creates an higher low. Creates an higher low, higher high, right? Higher low, higher high. So between this point where it made the um between this point where it made the between this point where it changed character and it's pulled back into a lower high, right? And then became an higher low. Because that okay, there was change of character again, change of character yet again. It's an uptrend. So it started an uptrend. Started an uptrend like that. So this was around 3249. 3249. So you just be buying, you just buy 3391, pull back to 3298. It pulled back, went higher, 3438. Swing traders that packed a lot of money. Then you see this, then it just started with a minor shift. An higher low. So who's that? So, so then we could see the minor movements price was trying to, do downtrendish, lower high, lower low, lower high, lower low, lower low. Then from this lower low, it does an higher low like that. So, because I mean, that's a change of character. Then higher, a lower high, I'm sorry, an higher high, sorry, because from this lower high, it creates a lower low, then it creates an higher high because higher than this lower high. So it's an higher high, and it pulls back, creates an higher low, and then create an higher low, and then another higher high. So an higher low again, and it will probably go and do another higher high, basically. I could see the madness that price was cooking. You could see the madness that price was cooking. The entire thing, basically. So now you could see that this there's a form of like bearish channel here. That okay, we're expecting that price to break below and push down. Sure, understand. That's why we were hoping that we'll get a further crash to um, previous weekly low. Yeah, to this point, say about this point, but that did not happen. So currently, right now, the if we are experiencing a market structure shift around here from 3347. Price crash creates a lower low, then creates an higher high. So let's break of structure. Let's break of structure here. Let's break of structure here. Price pulls back. Price pulls back. A lot of people have layered their buys. Price pulls back. A lot of people have layered their buys. Then price buys, breaks high again, creates an higher high again. Then price pulled back to this region. to this region of demand. Price pulls back to this region of demand, does a liquidity sweep, and it came a bearish channel, it broke out of it. So right now we'll be expecting a new higher high to be created again, and higher than this high. And then from there, we'll experience another pullback, then like that, like that, like that, like that, like that, meeting the conditions of this range trade. So yeah, this looks chaotic, by the way. This looks very chaotic. Now back to the chart we love so much. Did you know that different? I think each broker uses different charts on trading view, because basically, for example, now I have a prop firm account. I have prop firm accounts. I have gold funded, instant funding, and funded next. And I noticed that they all don't look alike. They all don't look alike. For instance, um, funded next uses Wanda, instant funding uses FXCM. Yes, instant funding uses FXCM. Instant funding uses FXCM. They are your chart on the MT5 on instant funding looks exactly how it is on FXCM, and on funded next it looks exactly how it is on Wanda. So try and just know the charts your whoever you are trading with, know the charts they use, so that way it will help you understand, properly know what you're trying to do. Because now yesterday I was observing the yesterday I was observing the 4 hours. When they got to this point, see this range. When they got to this point, this guy, this particular guy was still open. It had not yet closed on instant funding. On FXN, it had not yet closed. But on funded next, the guy had already closed, and a new candle already opened. Sure, you get. The guy already closed and new candle already opened. But on FXCM, it was still that one candle still dancing around. So you see, they look very, very different. So try and know what your broker uses. Whether it is a broker or prop firm, try and know what they use. So personally, I think we missed buys again. I think we missed these buys on gold. I think we missed buys on gold. Since it broke out of the trend, since it broke out of this trend line, came back for a retest, could have taken buys. Or well, we don't trade with trend line breakouts. That's our strategy. So we have to just leave it for the bosses that trade with trend line breakouts. We don't really fuck with trend line breakouts here. I mean, originally when I started trading, I started with support and resistance. Yes. So back then, this Wanda. Back then, my Wanda chart used to be so full of zones. You see, it was eventually I changed all the zones to lines instead, because the zones were just so much that it was just chuk, 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 chuk. So I changed them to lines. I changed them to all these lines. Normally, I mean, I'm supposed to have deleted them. I'm supposed to have deleted all these things, cleared the charts. Or it just felt like this is a part of my journey as a trader, right? So I think I'm just going to leave it alone. I used to trade zones, tap into zone, pull back, tap into zone, break out of zone. That was the trading pattern. Trend lines, zone. zone. The market just, I don't know, just started flying God. Flew, created all time high. I remember swinging this uptrend, from, yeah, swinging this uptrend. We didn't trade for like 3 days, this kind of thing. But then, he, then again, I moved from support and resistance. I did trend lines too. I moved from them. I moved to Fib trading. I started using Fib. At the time when I was solely focused on Fib. So I just be looking at as market is going. Then maybe when market stalls, markets get tired and decides to pull back, I now do Fib. Mark out the zone. Most times, market came and taps the Fib. Sometimes, never most times, sometimes market came taps the Fib entry and push. You understand? The direction I wanted to push. But oftentimes, the Fib was disrespected. So I think then after I started trying to, create a trading style that doesn't require me to use a lot of SL, because at the point started to I started to question why people needed wide SLs. Like, you don't need a wide SL. You don't need a wide SL. You just have to place your trade at a good place. So I started my sniper entry journey. That's when I started doing range trading, sniper entry journey, doing range trading, other blocks, not even range trading, it was other blocks. So these other blocks, and I had this thing that other blocks are what makes an order block valid. I think high volume, you can do with high volume, presence of fair value gap, yeah, high volume, fair value gap. I'm like, okay, I think I would like to fuck with this. I think I would like to use this, you understand? Use this other block to take trades. So that way I was able to take trades with very little SLs, like 30 pips SL, 40 pips SL 40 pips from entry, and then you swing it like 1:9, all this kind of crazy movements. Imagine risking $45 or so, or $50 for 360, yeah, that kind of thing. So, and then I was enjoying that style of trading. So I'm not like, okay, other blocks it is. So that's what we're going to be playing around with. So then I think we then moved to then we started doing range trading. So looking back. So let's looking back. Yeah, like we've established, this is the range we are trying to trade, right? This is the range we are trying to trade. So this is the range we are trading, or we've been trading so far. It's this range. So market swept range low, closed inside the range, and then we're expecting upward movement to the opposite side of the range. So now this is our previous weekly high, previous weekly low, 50% of this weekly candle, which is what we wanted to trade yesterday, sells, but we could not. So we could not really go far, because I mean, price actually gave us decent pips and decent pips, a whole lot of pips actually. From 5.1 to about 0.9. That's about how many pips is that? 42. 4,200 pips or 420 pips, anyone you guys are comfortable with using. So yeah, we're trying to look for an entry to take our trade. So previous weekly high has got swept. We were thinking price might come to sweep the previous weekly low, but if price comes to sweep previous weekly low, that would denote a change of character, and price might as well just disrespect every other thing that we've been trying to hold there. So daily. So now on the daily, let us remember that the overall sentiment is bullish. But yeah, so this is the daily. This is the daily time frame. Previous daily high. Previous daily low. Previous daily high. Daily high. Previous daily low. PDH. Right, then determine 50% of this range, which is here. So this is the range we hope we get to trade. This is the range we hope we probably get to trade today. So all right, then we switch to our 4 hours. Let's switch to our 4 hours. So on the 4 hours, you can see that all right, this should be Asian candle. London. We even missed a clean trade. We even missed a clean trade. This is the 4-hour candle. Missed a clean trade. Price swept this. If we wanted to trade this range, price swept it, would have taken the price to the opposite side of the range. Wow. This Asian session. This Asian session. This is Asian session. This Asian session. This is during the Asian session. Wow. So 6 a.m. 10 a.m. So this swept the Asian low, sweep on the Asian low, Asian range low of missed trade. That was after the Asian session, so it's 6 a.m. candle took out the Asian low because if we were active, we could have gotten sweet pips today if we were active, because range high, range low. After this candle closed, this 4-hour candle opened and swept range low, and then there was movement to the opposite side of the range. So this is a 6 o'clock candle. The 10 a.m. candle opened and swept the 6 a.m. candle. So this is 6 a.m. high and the 6 a.m. low. But as you can see, price has been closing inside. So price closed inside the Asian range. Closed above it, inside. All right, and this opened, took it and Now, previous daily high has been terminated. Previous daily high has been terminated. So. We might not get a trade today. We might not get a trade today. Because, I mean, now looking at this by, I think we missed a lot. Actually, I think we missed a lot. This was another block. This is another block, right? But the SL would have just been too ridiculous for us. So, I mean, can't take such trade. 3210, that's 22. 32, 3332 and 3309 or even 3310. That'll be that's about 220 pips. And but as you can see, price actually sniper entry to the upside. Was price pulled back to this other block here. And there's fair value gap at least between the first and the third candle. There's a fair value gap. So price came to this OB and price pushed off this OB. Price is pushing to the upside. After that's taking previous daily high, we still have some sweet liquidities to be swept. Let's have some sweet liquidities to be swept, plus we still have some sweet liquidities to be swept. So I don't know if we'll be getting any trades today, since we've missed a lot of opportunities. We're missing a lot of opportunities to take trades. So we move back to the 1 hour. Okay. So apologies for the intrusion. Okay, and high to a low. Price creates it's a lower high. Then price creates an higher low. So there's already a shift. And then price boomed. So we have like already have market structure shift, right? I mean, price has shown us that okay, structure is shifted, and I mean, as you can see, there's a clear break of structure. So would we be getting any entries? Depends on market's mood today. Depends on market's mood today. All right. And actually, if you ask me if I'll be taking a trade, let me remove this guy. Good. So now, where I would have liked the most to have taken a trade from would have been here, but apparently So in my mind of minds, I was thinking market did not come to market did not, come to where I would like to take the trade from, right? But little did I know that market actually did. Market actually did. But it was on the 4 hours. Market actually did tap into an OB on the 4 hour time frame. Market tapped into an OB on the 4 hour time frame, 3332. And now we're currently on 3358. That's about 260 pips. That's about 260 pips that we missed out on. And oh yeah, if we don't get a trade today, we can always go again tomorrow. So right, last candle before the impulsive move. Last candle before the impulsive move that led to the break of structure or change of character, whatever it is, basically. Now, this is the last candle. We can see high volume. You can see high volume. So presence of high volume confirmed. High volume confirmed. High volume confirmed. High volume confirmed. Let's change this color. Visibility. High volume confirmed. The border. Okay. So we have, for this OB, for this guy, for this nigger, for this guy, consider okay, we've confirmed that okay, high volume. Then now it means one more thing, fair value gap. Fair value gap. So in here and here. Okay. Confirm the fair value gap, but it's pretty small. Small. Very small, actually. We're not even there already. Please. So high volume confirmed and tiny fair value gap, actually. Tiny gap. Or we could consider taking this trade if price goes back, we might take this trade. This trade. This fair value gap is very tiny. This fair value gap is very, 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 very tiny. Very tiny. We might take this trade. We might take this trade. Might take this trade. And now the crazy thing is that if this gets disrespected and price comes here, price might come and take out sell-side liquidity. So oftentimes you're always stuck. Yeah, let's come and take out this sell-side liquidity and tap into this fair value gap. This is so brain tiring. Oh, sorry. This swing movement. So we might take this fair value gap is so wide. We might have to take our trade from the middle of the fair value gap and put SL below the fair value gap. Put SL below the fair value gap. might, 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 might. That's if price does not bounce back from this fair value gap up. Might test this OB if the OB would hold. If the OB would hold, our trade will look something like, if the OB would hold, our trade will look something like this. Let's say I'll just study sell side liquidity, then we'll be targeting these guys, targeting this liquidity. This will be 1:3.9. Then targeting him, we'll target this brother too. That will be our target. If if okay, this structure that price cooked, where that we might be entering here. So I'm gonna put one price alert here. Let's see if there are no price alerts that need to be removed. That was the lead price alert I just set. Now there's something I learned. There's something I learned about this break of structure thing. Something I learned about this break of structure thing. If a break of structure happens and a break of structure happens, you see price broke structure here, price broke, price swept this guy here. So now this region might be respected. This region might be respected for the pullback to happen because price broke here, price broke here. So this region might be respected and price might use this region to pull back and then take out this guy and this guy. So at this point, we're going to secure partials, and at this point, take our full profit. At this point, price might, all these things that might be making market, market market. So we just have to see, but if price stretches out too much, then the OB starts to become invalid because if price starts to come back down to that region, price might as well, for it. Sorry, look at what I was talking. Look at what I'm talking. Let me give you an instance of what I'm talking about. Here, for instance, see this price. I mean, you can see low, low and high, lower high, like that, like that, like that, like that. Price shall cook. Point is, price stretched out a lot. You see these sweeps, you can see the sweeps, price stretched out a lot. And now, by the time price pulled back to this point, it disrespected it. So let's say anybody puts pending order here. Let's say anybody had put a pending order here for a sale. Price said it disrespected this place. This whatever will be might have been. Price said it disrespected it. And price crushed there. So I don't care. You know, the gym is- yeah.
But you know, like say, when they talk, we don't go do like say Alex did this class.
It will show now.
It will show, but you know, go reason now.
But we are almost done with the class. Time is almost up.
No, I mean the next 2 months.
Sure,
So this
sure.
recorded.
Yeah, sure.
As I should be collecting the record. If you
Recorded.
people on YouTube.
I was thinking of that too. My Anyways, you can see like that now. Stretch out too much, disrespected the fair value gap. Plus, we also see that okay, King get the low greater than high, it's even too much for a high. For a lower high, then this this clean, clean shift. Clear as they shift. Very clear shift. It's coming from an high, it creates a low. It's supposed to create an higher low, right? It's supposed to be an higher low, tap. The low should have stopped like around this region here, right? The low should have stopped like around this region here. Let's remove this guy. The low should have stopped like around this point. The high, sorry, should have stopped like around this point because I mean it, it's there from an high. See, it's coming from an high, it comes low, right? Lower high should have been about here. Should have been about here. Then lower low. But it disrespected it. If I took a fib, if I took a trade based off of fib, let's say I was waiting that okay, I'll trade the pullback. I took a trade based off of fib retracement. My entry would have probably been around here. My SL, let's say I enter here, my SL would have been about here, so I would have hit SL. Let's say I even put my SL here, I would have still hit SL, right? Because price pulls back to my entry price, I still came back to come and smash the SL. So all these type of things, one has to be very careful when choosing the other block you want to trade and stuff like that. If this guy stretches out too far, I would automatically cancel out this OB because anything that will make price come back, it might just come and sweep liquidity. So I'm just going to I would just not take the trade basically and just probably look for another opportunity or wait for something to happen, wait for something else to happen. But anyways, so far I would say this is what we have. So far I would say this is what we have on gold. Hopefully price does not stretch out too much and it comes back. Hopefully. Not that it can't, but hopefully price does not stretch out too far and we get a trade, hopefully. So we could take it with this fair value gap. We could use this fair value gap. Sorry, even the OB. We could just use this OB here, which would be about 62% of the fib, which is like optimal trade entry. So we could just tap here, use this OB to take our trade. And 40 SL will have to be below here. SL will have to be around here. That kind of thing. If we are going to try taking the trade, it would look something like that. We'll most probably take it from here. Because if it's just as disrespect, if it gets here, we might get stopped out. So but it doesn't seem like this one wants to pull back. Let's go back to the 4 hours. Let's go back to the 4 hours. New York session is cooking already. New York session is cooking already. So you just have to see what this 4-hour candle would look like when it closes. Anyways, I think at this point we would end this stream. An update will be given later an update of our trade will be given later on the next recording. Just this region that I think I would like to use trade with something around this region. Well, I mean, I don't control the market. My father doesn't own the market. Yeah, broke out of this bearish channel. Broke out of it. Might be expecting further upside. Further upside. We missed this. We missed this for our OB trade. We missed this for our OB trade. Sniper entry, by the way. Like sniper entry to the upside. Sniper entry to the upside. This for OBC. High volume candle present. Fair value gap present. It taps the OB. Shot up to the sky. Boom, boom. Taking out PDH, taking out this other liquidity. And who knows, it might take out this liquidity. At that point, I don't want to take this buys anymore. I'll just observe, I guess. I'll just observe and see what's going to happen. Anyways, we missed a lot of trades. We missed a lot of trades today. We missed a lot of trades today. We missed this pullback trade. This is missed this pullback trade. We missed this. We missed this. We missed this 6. We missed this 6 a.m. candle tapping into this 10 a.m. into this previous 10 p.m. candle. This 10 p.m. candle of Thursday. Missed this 6 a.m. candle tapping into this OB. We missed the 6 a.m. candle taking out the Asian session candle and pushing to the upside. So we've missed 2 good setups. Might as well just not take any trades today. Well, of course, if we get nice setup along the way, we'll take it. If not, we chill and let market do its thing. That's it. No trying to force trades, no revenge trading, most especially no revenge trading. Personally, I believe that if you are going to take a trade, you need to have reasons. You need to have reasons for taking trade. You need to have reasons for taking a trade. Enough reasons why you want to take this trade, why you want to take that trade. Doesn't have to be too much, but there need to be reasons why, okay, I'll take a trade. For instance, okay, on the weekly, blah, 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 blah. Then this, I saw this on the daily, blah, blah, blah. 4 hours, blah, blah, blah. Things that support that trade you want to take. Then you take your trade, that kind of thing. So yeah, that will be the end of today's session.